Yes, great to be with you, Bev. It is. On the one hand, people hear declining prices, and the rest of the world, of course, has been, as you noted, battling inflation or stagflation. So, what's wrong with declining prices? Well, the truth is, deflation is just essentially a sign of a weakening economy. Economists fear it because falling prices lead to lower consumer spending, which is a major component of economic growth. And of course, what China was really relying on to revive its economy this year. Increased consumption was supposed to be what drove China's rebound. And instead, we've seen that rebound losing steam. And so this is just one part of a broader slowdown that's causing stress for consumers, investors, and other market participants in China.
What are the biggest sectors that are, causing this lack of confidence?
This data on the consumer price index decline comes a day after trade figures also showed exports and imports both slumping in July. And it's also following a spate of reports about more debt troubles in China's giant property sectors. So it seems that both consumers and companies are essentially hoarding cash rather than spending it or investing it, even with lower interest rates at the moment. So this is kind of a broader challenge. But I think the biggest concern, of course, has been the stark reminder that we saw on August 6th with another indebted property developer running into trouble, that kind of the property slowdown in the real estate sector remained deeply complicated in China.
Yeah. Of course, much of the world economy depends on a robust China economy. What could that flow-on effect be for countries like Australia?
It's interesting because on the one hand, deflation is really seen often as an intensely local problem. The bigger challenge is if this kind of spreads out, particularly around oil prices or whether China undertakes stimulus measures that would have rebound effects overseas. So I think that's the biggest concern more broadly. And I think, as we've seen before, if you look at the way that China really led the recovery out of the global economic crisis in 2008, 2009, on the back of Chinese stimulus packages, we kind of all recovered. We're kind of in the opposite situation right now, where if China doesn't undertake the stimulus measures to kind of stabilize its economy as it goes into the second half of this year and into 2024, it could spell trouble for the rest of us, including Australia, particularly obviously with the importance of China as a trade partner for Australia.
Yeah. What is your sense of what Xi Jinping is going to do in terms of the direction of the economy and trying to create stimulus? Do you think that will be the direction?
Typically the combination of slow growth and this deflationary peril that China is in at the moment, it's troubling, of course, but the textbook response to both problems is stimulus, which is meant to, revive spending, lift growth, and dispel the deflation. We have again and again seen, though, commentators and economists feeling as though China is not doing enough in the right directions on stimulus. So while you have seen some muted measures, for example, making it easier to sell old appliances or keeping amusement parks open later to try and boost consumption, there seems to be this idea that you need to reinflate the tire through the puncture hole, which is around consumer spending, when there are also kind of other policy tools in the toolbox that China could draw on. What we've seen so far, though, for example, we haven't seen fiscal easing, which might kind of stabilize employment or improve the incomes of private borrowers, kind of revive the feelings of economic insecurity that are plaguing China right now. So I think that's what people are kind of holding their breath for down the line, to see what new measures we'll see that are not just purely supply side. What, China wants, of course, in the long term is to promote, and this is a priority for Xi Jinping, high quality growth. That is innovative, well-paid, green and resilient, rather than kind of low-quality growth, spending on redundant infrastructure, cheap manufacturing, or speculative home building. The truth is, reform and stimulus don't need to conflict. And so if we see, for example, investment in green infrastructure or, for example, flood prevention, that might kind of boost demand and help China also at the same time adapt to a changing environment. So I think those are the areas where people are looking at now. Can you do both at the same time?
Yeah. What do you make of the move by the US to thwart tech companies investing in China?
I think that's part of a very long and complicated, way in which the U.S.-China tensions have come down to be squarely focused just on technology. And it's understandable because we're operating in an environment of no trust in the trade relationship, or very limited trust in the relationship more broadly. And the reason that China, for example, thinks of high quality growth as being something focused on innovation and on critical technologies is because that is the future. That's what we're all trying to unlock. Whether you're Australia, China, the United States, whoever kind of gets the best tech first is going to kind of win in globalization 2.0, so to speak. And if you don't trust that the technology will not be used in the way that it's intended, it's impossible to trade in those areas. And so this is just yet another effort, I think, by the United States to protect its core interests and its national security interests. And I will not be surprised if we don't see a corollary or correlating response from China. They've both been operating in this way.
Yes, indeed, and sort of perhaps prohibiting some of the very important rare earth minerals and stuff that China have in spades. Good to see you as always, Matti. Thanks for your time.
Thank you.